Inflation data from Europe is sparking concerns. The Eurozone is teetering on the brink of a recession. Lauren Cooper is a BlackRock senior macro strategist and has a focus on the Eurozone. Laura, good to see you here this morning. Is Europe in a recession?
I think at this point, we're not yet seeing signs that Europe in recession. Yes, I think the upward inflation pressures that we are seeing in terms of the upside surprises coming through does certainly intensify the risk of a recession. But at this point, yes, the energy shock could curtail growth. We're not yet kind of declaring a recession at this point. But I think crucial will be to watch the ECB and how they react to these inflationary prints. We're already seeing money markets ramp up those tightening bets to above 100 basis points of hikes by year end. And so I think it'd be quite interesting to see the commentary about how they're viewing these inflation prints in the context of a challenging growth backdrop.
To what extent do you believe that the ongoing pushback against Russian energy imports and any type of sources of energy from there are going to continue to contribute to, quite frankly, the detriment that's already been incurred, especially in the European markets?
Well, I think at this point, it's a fairly limited reaction as to what we expect. It still has to be implemented, and then it's going to be likely phased in over a 6-month time span. And I think, yes, this aggravates the energy shock. But actually, if we look at what the data is telling us already, we actually see that oil and natural gas import volumes to the continent have actually increased since the invasion of Ukraine. So I think at this point, yes, there could be a lagged effect. But given the fact that, oil prices are sitting at about $120 barrel on the back of this. If anything, we're kind of dismissing it at this point, but certainly watching going forward for actually implementation going forward.
Laura, I think a lot of investors watching us right now, they're mostly invested in the U.S. and they're probably wondering, well, how does Europe impact my portfolio? What do you think an aggressive tightening by policymakers in Europe, what would that mean to U.S.-focused investors?
Well, I think certainly what we're seeing in terms of flow data as well, we are seeing this flight to quality in terms of US. So even when we look at European-based investors, they are seeing kind of that quality tilt within US equities as quite attractive. And as you mentioned, this is really reflective of the fact that there's a great deal of uncertainty, not only on the growth outlook in Europe, but again, its exposure to Russia and to other kind of big export markets, but as well in the US. We have still uncertainty around the policy outlook there. And given the cloud of uncertainty, I think it's quite prudent that investors are looking to the US. And in fact, this is one of the reasons why we downgraded our view, not only on developed market equities, but certainly within Europe because of the growth challenges ahead.
So with the volatility that's certainly been experienced across the DAX, the FTSE, the KAYAK, at this point in time, are you expecting that there are pockets that investors will start to lean into? And if so, where are you seeing those pockets?
Yeah, and I certainly think that is the case. And I think this type of environment does warrant being quite selective. And in fact, when we have client conversations, the lack of conviction in terms of directionality does suggest that there is this need for being quite selective on both the sector and factor basis. So for example, if we look, healthcare is actually seeing quite strong flows, as well as utilities. It's really those defensive sectors, those defensive tilts that are starting to be quite attractive to investors. And likely that's going to be a trend that is going to persist. But another interesting fact that we are seeing is that tech, we've seen a significant de-rating already this year. Yes, it's been quite downbeat in terms of looking at, for example, the NASDAQ year to date. But again, this quality tilt, we are still seeing fairly robust earnings. And given the fact that valuations have come up quite a bit in line with their longer term averages, we are still seeing tech as an attractive play here in despite kind of the backdrop of potentially even rising rates.
Laura, as a macro strategist, perhaps you can help me understand this one. Do higher taxes on the wealthy and corporations, does that help bring down inflation?
I mean, I think it's quite dynamic in terms of, we can't necessarily look at it from a broad brush. So if we look at what I think the interesting thing in terms of inflation dynamics now is the fact that we are seeing it pivot away from goods and towards services sectors. And so, yes, we could potentially see those lower income households who are hit more by inflation that could actually start to feed into the consumer data. We're not yet quite seeing strong signs of that, but certainly I think at this point, it's really the underpinnings of inflation that's going to matter most. predominantly, if we look at the US, it's really a broad inflation pressure backdrop. We have seen used autos, we have seen housing, we have seen a number of different components come under pressure, whereas in Europe, it's largely more contained within the energy price shock. So I think it's really interesting dynamics for central bankers to watch on the inflation front going forward.
Memorial Day weekend travelers had a rough weekend with 5,000 flight delays, 500 cancellations just yesterday. The holiday, which marks the unofficial start of the travel season, gives us a nice gauge of the strength of the hotel and airline sectors. Let's bring in someone who reads those gauges. Steve Hafner, CEO over at KAYAK, is here with us live. Steve, great to have you on the program. Wanted to ask you just kind of broadly about the trends that you were seeing. Again, this is kind of a critical weekend to gauge the demand for travel through the summer season. What are the numbers looking like from KAYAK's standpoint?
Well, thanks for having me on, Brian. It was an amazing start to the travel season. So Memorial Day, if you went through an airport, which more than 13 million Americans did, that's only down 7% versus 2019. Memorial Day weekend historically is actually a road trip weekend. So there's a lot more people in traffic than in airports and on planes. And if you look at KAYAK search data for that, very robust travel demand. Our rental car queries were up 125% versus 2019. So we're off to a very strong start for the summer.
Steve, it's Akiko here. We have heard so much about the huge spike in airline ticket prices. It doesn't seem like, if you look at the numbers, that's necessarily affected travel plans just yet. I mean, what does that tell you about the summer demand that's to come, and whether you can maintain that kind of demand in the face of inflation?
Look, the demand is very, very strong. So if you look at KAYAK data again, flights were up 16% for the summer versus a couple years ago. Hotels, 50%, and rental cars actually 130%. So people want to get out and travel. The downside to that, of course, is the industry can't add that level of supply on. You can't bring that many new planes and new cars and new hotels. So prices skyrocket. So airfares, for those of you who are buying air tickets, you've noticed it. They're about 45% higher than they were in 2019. Hotels only 20%. Rental cars even more expensive, over 70% more expensive than they were in 2019. So it's going to be a tough environment for folks who are hitting the road.
At the same time, though, what we know is that people want to get out there, right? I mean, it's 2022. People are still a little bit eager to go out and explore different places because they weren't able to during most of the pandemic. Tell us about the traffic on your website, which plugs in potential travelers with travel ideas and then itineraries by which they can actually book them. Are you seeing web traffic comparable to certain levels when, the vaccination campaigns were out en masse last year? What does it look like now?
It's even better than last year. So the rebound is very strong. And it's not just here at KAYAK. I think everyone in the travel industry is seeing it, from airlines to hoteliers, et cetera. So, I think for folks who are traveling, there are, it's a little bit harder or a lot harder to find deals, and deals are a relative term these days. So if you've got flexibility on destinations and on dates, you're better able to lock down a good price. If you want to use KAYAK Fare Alerts, we can notify you when prices fall. But if you do go out there and you're willing to head south, you can find good deals. If you want to get to Europe versus 2019, the dollar is about 15% stronger against the euro. We're almost 1-to-1 again. So Europe is a little bit on sale, if you will.
It's a good time to go shopping in Europe. Steve, what does that data tell you, though, about where exactly people are headed? Is it largely domestic travel? Is it the usual international destinations like Europe? Where are you seeing the biggest demand?
It's still domestic travel because, unfortunately, if you're going to get on a flight outside of the U.S., you still have to wear a mask and you still have to get tested on the way out and the way back in. And for a lot of people, that's a hassle. So they prefer to stay local. If they are traveling international, the two biggest markets that we're seeing lift now are the shortest markets away. So Mexico and to Canada. So that's where people seem to be traveling. Although Europe historically has been very popular for the summer, we're not at the levels that we used to be in 2019.
The Web3 world, consisting of crypto and the NFT marketplace, as well as the metaverse, is largely male-dominated these days. Research shows that women make up fewer than 15% of the crypto space. founder of the billion-dollar cosmetics company Huda Beauty, as well as Wishful Skincare. Huda Katana is among the powerhouses attempting to change that dynamic. I had the chance to sit down with the influencer and entrepreneur at Gary Vaynerchuk's NFT conference, VCon, to talk about the volatility she often warns of in this industry.
As much as I've made money, I've lost a lot of money. And it's very easy to be like, oh my God, buy this lipstick, buy this thing. There's no real downfall. If you don't like it, you don't like it. You lost $20. If you invest in an NFT project, you become a part of the community, you invest so much time, and that doesn't go well, that is your wealth, that is your livelihood. It's very different. I think people underestimate their influence in the fact that people want to live like them, right? You buy into this project because you want to be like the celebrity, you want to live this life. Well, sometimes that's all that people have. And they could lose everything. And I think that's something that we need to think about.
Should they be warning people more of the downside?
We all should be. If you're in the space, it's so easy to be like, oh my God, I made this much money, it's so great. Yeah. It's not easy to talk about the mistakes that you make, but it's really, really important.
The third thing you said that caught my attention was that passion needs to be an essential element. So many people go into it simply to make money, get in and out. Yeah. How essential is being passionate?
If you really care about a project, you are able to be patient. If you don't care about a project, you're going to be really hurt when the market goes up and down. So I think, if you are somebody who brings the passion, who brings all of that, you're adding also so much value to that community. You help the ecosystem. So, to me, passion is essential. I know not everybody will feel that way, but I do believe that when you have passion, you bring so much more to that community, more than just the value of buying the NFTs. The community is so important for NFTs. People go there sometimes to be a part of this. They want to hear the GMs, the GNs. They want to feel like they can be like a part of an ecosystem that gives them confidence and love and understands them. So that passion is really essential for that.
Yourself, Eva Longoria, Mila Kunis all have one common goal, which is to increase the ratio. If you look around here at VCon, it's probably 50, if not 100 men to one. Only 2% of the money from VCs is going towards female startups. Why are women not here and not in the industry as a whole?
I was a little disappointed to see the turnout of women here, I'm not going to lie. And I think with a lot of the events right now, I think women feel very uncomfortable in the space, still. And, I had hoped to see more women, but I just think it's not. I'm a strong woman. I'm a very comfortable woman. I have a lot of personality. I've very rarely been uncomfortable in any situation, and I am intimidated in the space. So I can't imagine how other women must feel. And I think that if we as a community, as an industry, if the NFT space does not make a conscious effort to get women here, it is always going to be like this. So I think it needs to be a very conscious effort. I know Gary did try by inviting people like myself. Unfortunately, it's still not there. It's still not there now.
One of the things that fascinates me about your business is you've built it essentially with no advertising. A $1 billion company with essentially no advertising. How is that done?
We were very early adopters of, the social media days, and I think that we understood the algorithm. We were growth hacking. We definitely are scrappy, and I think that's what's so cool about this space. I believe so much. I see the NFT space right now. It reminds me so much of the beauty space, where everybody was coming into it. VCs, all these companies were coming into it, trying to make money very quickly. And when I talk to the founders, it's like the story. I'm like, oh my God, your story reminds me of my story. It's like the same thing. Their product is the NFT. Their community is, their NFT holders. It's very much reminiscent. And I think that, you're going to see a very interesting shift within the industry of the NFTs where it just changes very, very quickly.
The root of your story is pinned on your Twitter account, which is failure in a matter of speaking. 2008. What did you learn from that? How did it drive you?
So I was fired during the recession in 2008, spent my whole entire life investing in my CV, working, trying to get, to be polished and what would be perfect for, a professional company. I realized that, I don't think everybody needs to fit into a box, and I certainly did not fit into any boxes, was trying to, and it was not working. And, my boss at the time actually told me, he was like, which was really rude, but he was like, what are you doing here? Why aren't you in beauty or fashion? And I was like so mad at him. And I felt like I needed to prove something by being this, this polished person. But then I realized I'm who I am, even now in the beauty space, right? I'm talking about NFTs, I'm talking about financial information. It would be so normal for me to just want to stick to beauty. And the more that we, evolve as people, we want to see different facets to everyone. Nobody is one side of themselves. We're so complicated, we're so complex, and that's beautiful. And that's what I think I've learned from, that experience is that, I have so many different elements of who I am, and as I've gone on this journey, I'm becoming more and more of who I am.
What's the best business advice you've either been given or you would give to someone who wants to do a startup today?
I would advise people, and I've said this to a few of my friends who want to start their businesses, people think that in order to start a business, you need to have it all figured out. You need to have the fancy presentation, the fancy packaging, all these things, and I just couldn't disagree with that more. I didn't have any money when I first started out. I remember the lash packaging. Actually, the lash packaging I still have is a selfie I took of myself because I had no money I didn't have money to hire a photographer. Everything was really scrappy. And I think the element of just being able to get things done, not waiting for it to be perfect. I think that's so important. A lot of times we want everything to be, we have this fear, this image of how things are supposed to be perfect, and we're never that version of ourselves. And it's like, why? Just start. Somebody out there wants what you're selling. You know what I mean?
Is that a message you would preach to young girls who idolize you, teenagers that idolize you? It is a tough time. Girls are going through eating disorders. Makeup is a $500 billion industry for a reason. We are consumed with the way we look. What is your message to those young girls that look up to you?
I had a really hard time with my own journey with beauty because, I actually didn't realize it, but I got into beauty because I felt really ugly, and I thought makeup was gonna make me feel better. And it's so funny, I've been through this journey and I'm lucky because I have my brand that helped me get through this. It's a personal brand. And I've had a lot of, therapy, a lot of my life coach, she works with me. And I realized, that I was trying to cover up something, within myself. I didn't know it was me that was wearing them. The makeup was not wearing me, I was wearing the makeup. But I didn't understand that. And I almost had to strip everything back. And not until I did was I well, this woman deserves to be loved. I remember we were shooting something and I was not wearing makeup. We weren't going to Photoshop it was the launch of our skincare Wishful. And I was our products really work. I don't want to wear makeup. I don't want to Photoshop the images. I want to show that it works. And I got in front of the camera. I'm so good at taking photos. I am so good at taking photos. I can work my angles. I lost all my confidence. And I remember looking at the photos and I was I felt so vulnerable and so exposed. And I looked at the photos and I was this woman deserves to be loved. She has worked her butt off. And I think the element of stripping everything back really helped me. But we are in a very visual world and we're constantly bombarded with images telling us that we're not good enough, that you're supposed to look this way. It's really important to remember that things are sold that way to us, And I think that we need to redefine beauty for ourselves. Our mission at Hood of Beauty is to unfuck the beauty standards.
I love it.
Because we've all been told a story.
T-shirt.
Yeah, we're gonna do it. We're gonna do the merch drop. We're gonna do the merch drop. You heard it here. But we all have been told a certain standard of beauty is what we're supposed to do. And even I've been sold that. I'm trying to unsell that to myself. It's really, really, really hard. And I think we're supposed to we need to embrace what beauty means to us, but it's really hard with social media. As amazing as social media is, it's also really unhealthy as well.
Meta is the hottest ticker on the Yahoo Finance platform. Our news of Sheryl Sandberg stepping down as COO. Let's dive into what this departure means to Meta's outlook. Jefferies analyst Brent Thill joins us now. Brent, good to see you as always. So lots of different paths you could take here, and perhaps one way to maybe look at it if you're an investor in here, this company is now going to shift major focus and resources to the metaverse. Well, the problem is the metaverse is not making any money, and it's really hard to define. How do you take it?
Yeah, look, the Sheryl news is obviously a blow given her commitment, but I think they have a clear leader who stepped in, has been there and run multiple aspects of the business. So we don't feel uncomfortable about that, but definitely a blow to the story in the interim. I think from the metaverse perspective, I don't believe that's the case. I think there's an optical illusion that everyone's created that They're going after the metaverse, when the reality is the next, call it next 3+ years are going to be all ad driven. There's no real new substitute revenue stream that's going to come in. So if you think about other stories, we talked about the analogy of Microsoft when they were the operating system company and they had to build Azure, which was their cloud infrastructure platform or the applications. Companies go through pit stops, and we think this is a pit stop that they do need to look for another revenue engine. They need to diversify the story, but make no mistake, the majority of their revenue is going to come from advertising for a long, long, long time. And they happen to have the best targeting engine on the planet to find our interests and go after us. And that's why there's so many advertisers that want to be on the platform, because they have, number one, the biggest reach on the planet of number of users. And number two, they have the most sophisticated targeting engine. All you have to do is pull up Instagram and type in a few things and you'll instantly find how good it is. And so that's going to drive the story in the interim. Yes, they're putting money in the next generation of the internet. Yes, they're putting money into Oculus, and can they make money on this? We'll see. But I think that this concern and fear that they're going to blow all this cash because they're going after the metaverse is completely overdone, in my opinion, because at the end of the day, right, it's still an ad-driven model. And we do think they're looking for a diversification engine, and they need to do more. And good for them to make the change and get the company on the right course to find that. But I don't think that they're out of energy or speed or excitement from the advertising community. Yeah, you've had some blows from the Apple privacy change. Yes, you've seen some macro headwinds on advertisers, and we're concerned about the overall advertising market with the Snap negative what the Google comp, the Facebook comp, which are all difficult, right? Coming out of the pandemic. So we're going through that. And I think that's the biggest issue facing the global advertising industry, is really just the macro slowdown, not the move to the metaverse.
Hey, Brent, if I could take a step back for just a hot second here, considering the time period that Sheryl Sandberg was at Facebook and for the era that they were this advertising behemoth and the operations that for many of the cases being looked at as the adult in the room, if you will, that she had to make sure that this company was growing up and growing up quickly. When you think about her era, her time, how will she be remembered, considering everything from the growth of their revenue all the way to some of the Cambridge Analytica data scandals, and even to, let's be quite frank, the representation that she brought in the form of a woman at the head of a major Silicon Valley company, and where the broader industry still needs to make strides?
I mean, there's no question she had a massive impact. I mean, I think ultimately every company and every individual along the way is going to have some downticks. And, some of the things that you mentioned were clearly not a direct reflection of her, but, at her time. But I think ultimately she's going to be remembered as someone that made a huge impact, and clearly for female executives, helped led the way. And I think ultimately you're seeing this now. A lot of the tech companies are still massively underrepresented, in their top ranks with females, and obviously the tech industry is trying to change that. Look, I think ultimately the individual that's coming in to replace her has incredible experience running, the company's international growth products, number of initiatives. So they didn't just pluck someone off the street that just came out of college. I mean, you have an individual now that's been in the company well over a decade and run multiple initiatives, including building the entire international business out for them. So I think, if you look at the issues separate, this is no question a blow, and she has had a massive impact, and there will be a massive hole left by her departure. But ultimately, I do think that this is one individual, and they've got a talented bench, and they prove that they've got individuals that have been there for a long, long time, that know the company, know multiple aspects of the business, and can step in and lead. So I don't believe that this is going to be a massive issue. I think you're seeing that in the stock. The stock has not negatively reacted in a big way that many would think, given her departure. But look, she put in an incredible amount of time, incredible experience, and is had a massive impact on the company. So I think we'll see what ends up in terms of the next chapter. I'm sure she'll go on to do phenomenal things. But I don't believe, again, having covered tech for 2 decades, the quick reaction is when someone like this of this caliber leaves that something's massively wrong. I don't necessarily, I'm not drawing that. I'm drawing the line of, hey, this looks more like Adobe, Microsoft, other great tech companies that merely take a pit stop and are changing the tires and washing the windshield, and they're going to get back on the road. How long it takes to get them back on the road, is, again, the macro is coming in. The first thing that companies cut in a downturn is the macro, is advertising.
Brent, you mentioned, you brought up a good point on terms of female leadership. Now, out of all the tech companies you cover, is there someone or a group of leaders that might take that leadership baton away from Sheryl Sandberg, that they can step up here and drive a lot of the key messages that she has been driving?
Absolutely. So there's 2 software CEOs in software named Amy Hood, Amy Weaver. Amy Hood at Microsoft. I've worked with Amy Hood for well over a decade, and I have incredible respect. She is, in my opinion, the single most important female exec out there right now in tech. And I'd say, obviously, close number 2 would be Amy Weaver at Salesforce.com. Not a traditional CFO, but came through the legal community. And again, everyone inside Salesforce.com knows that when Amy snaps her fingers, she can herd cats from Minnesota, New Jersey, and Florida into a room in California in 2 seconds. She commands incredible respect and is an incredible leader. So I'd say right now, those are the 2 that come to mind. There are others, and apologize for leaving the others out, but I'd say those are the 2 that really come to mind on the top of my list.
Just quickly, kind of pivoting back to Meta, as we know that the ticker symbol is going to change soon, how quickly does the revenue model also change now that you have some of the executive, not just shake-up, but more so the executive kind of changeover here and the reprioritization of where that revenue is being driven that is clearly in line here at Facebook?
It's a glacial change. It's, as I said earlier, the advertising model is going to be here for a long time. So if anyone's looking for a massive inflection, the metaverse and all these creatures roaming in this new world and in goggles and whatever else you want to call it, it's going to take forever. So it's really an ad-driven model. And I think what they're trying to do, again, is what Microsoft, Adobe, other great tech companies did, was find another revenue engine beyond just the core, right? Oracle did this way back when. They were a database company, and then they moved into applications, right? Microsoft was the operating system company and then went into cloud infrastructure with Azure. They went into gaming. They went into other areas to diversify. So it took those companies, years, if not decades, to build some of these new businesses. Adobe with the Experience Cloud, they were the Creative Cloud. Then they acquired their way into the Experience Cloud, which is one of the 3 main clouds they have. So again, the analogy is it's going to take a long time. They can do it. We believe that, again, they have the user base. Yes, TikTok is a threat for the younger audience, and my kids are not on Facebook, they're on TikTok. Yes, Snap is a threat. There are other gaming stories where you may end up going to the metaverse in other ways through other platforms than Facebook going forward. So there's clearly a lot of risks ahead. But again, I think when you think about the company and what they've done, even with Reels, they were way behind in what was happening with TikTok. And I think there's signs that they're starting to catch up and show more progress in a product like Reels. So never count them out. And ultimately, I think, again, this is going to take a long time to figure out the revenue source from the metaverse. Yeah, they're plowing billions of dollars into it, but I think it's the right call because they need to make the move and try to diversify. And so that's the risk. This diversification move may not pay off. I think it will, but it's going to take time to actually show that. And the market doesn't like uncertainty. And so a lot of investors are sitting out saying, well, I'll wait to see the signs of the metaverse come. But again, I don't think you need to look at that. I think you look at the advertising business, and that's the single biggest driver.
Brent, before we let you go, I caught a good note from you where you were crunching the numbers on the dating stocks, so Match, Bumble. Are companies like that recession-proof?
There's no recession in love. You need shelter, food, and love. And I think, in times like this, you kind of realize like the consumer's been going so hot and heavy with buying second homes. And, you look at what's going on at the core, right? You need the community around you. You need friends and your family, and you need love. And I think that we've said this, that, our headquarters in New York, there's a restaurant across the street. There's a margarita called the Mother of Dragons that's $30 for one margarita. The cost of a dating app is $15 to $30 a month, right? So like, I look at that and I'm like, okay, it's incredible the value that the daters get for what they pay. And again, I'm a 20-year married guy with 3 kids, so I'm not using these apps, full disclosure, but I talk to my friends that are single and other colleagues that are single that use it. And I think there's incredible value in what these companies have. I think they have incredible pricing power. I think they will be more recession proof, because you go back to the core. Are you going to take the expensive trip to Asia, or are you going to spend $15 to $20 to ensure the basics, the things that you need when things are tough? So no one's immune in tech, that's for sure. From the macro heads, the storms that are coming in on the macro side. But I think that, Bumble with their female first app, and they can diversify to this incredible $30 trillion of spend for females. And that's a really big opportunity. And I really believe in what Whitney, the CEO, is doing and her vision long term. It's not happening short term, but they can unlock this female spending power. And then look at Match, global brand from 18 years old to over 50 for the old fogies can date. They have an app for every lifestyle. They have an app for every geographic region in Japan, in Europe, the US. They're incredibly well diversified, and a new leader coming in at Match from Zynga. So we'll see what he can do. But we like both stories, and we think, again, they're more recession proof than others. But again, no one's immune. But we like both those names right here.
Well, Brent, we here at Yahoo Finance, we love you. We love your analysis. Sending you a digital hug through the metaverse right now. Jefferies analyst Brent Thill, always good to see you.
Longtime Facebook executive Sheryl Sandberg announcing she will step down from her role as Chief Operating Officer of Meta, marking the end of a 14-year partnership with CEO and founder Mark Zuckerberg. Now, we want to bring in Sarah Fisher, Axios's media reporter, on this. And Sarah, I want to start with a tweet that you sent out this morning saying that Sheryl Sandberg grew Meta's revenue from $272 million in 2008 when she started with the company to $118 billion in 2021. 43,000% growth. A Facebook, or a Meta, I should say, without Sandberg. How worrisome, how challenging could this potentially be for the company, given her track record?
I think it's actually more of a cultural issue. There have been so many teams and people brought in under her scope that without her there, I think there's a sense of lost leadership. But in terms of the advertising machine moving forward, what she's built at this point sort of operates without her. There is a bunch of people, Marty Levine, the chief business officer, they have a new head of ads, who are continuing the momentum of the self-service ad platform, which is how Facebook makes most of its money, and continuing the momentum of advertising around new products. I think the challenge becomes Sheryl Sandberg was the person who innovated to bring advertising to mobile from desktop. And right now, Facebook is in a huge transition phase, moving from mobile phones to what they call the metaverse, anything from virtual reality to augmented reality. And you need a strong leader to guide that transition over to that new medium and to monetize it. And I guess the concern is, if it's not going to be Sheryl, I guess it now falls to Marty Levine, Chief Business Officer. Is Marty ready to take on such a huge task? And especially taking it on at a time when Facebook is under so much scrutiny. Remember, Facebook bought Instagram. It bought one of its most popular mobile platforms to begin inserting ads onto mobile. They're not going to be able to acquire their way through the metaverse with a lot of the antitrust scrutiny against it. And so they're going to have to be really, really innovative and really take a lot of risks in order to make that jump.
Sarah, nice to see you. Dave Briggs here. The market reaction, a bit surprising. The stock up 5.6% with the news. Is there internal concern at Facebook about her departure? And what does her departure tell us about the direction that Facebook heads from here?
I just think it means that they're going to really double down on this idea of the metaverse. I think Sheryl Sandberg is getting out at a smart time. She's getting out as the company transitions away from her bread and butter, which has been digital and mobile advertising. Internally, they've set up a pretty strong structure of people that are going to take over for the things that she used to oversee. They announced a new COO yesterday who will function in a little bit of a different capacity from what Sheryl did as COO. As I mentioned, they have a new chief business officer. And so I think they're preparing this next level of execs. But I do think that there is some level of concern internally. It's just been a huge force in leadership culturally at the company for so long. For her to be transitioning out is a real signal that the company is moving into its next major phase. And that's always exciting, but also comes with huge challenges.
And so with Sheryl Sandberg's exit, of course, she has been such a champion of women in the workplace. She has said that women need to be aggressive. They need to demand a seat at the table, something that we haven't necessarily seen, or I guess isn't so common, especially in the technology industry. Talk to us just about how much she has changed the game for women in the business world and specifically in tech.
Oh, it's been massive. I think this is one of Sheryl Sandberg's most important legacies that she left behind. I mean, I focused my story on the business impact that she made, but there's many more stories to be written about the human impact that she made. I think the big thing for Sheryl Sandberg is she proved that women don't have to make these binary choices between having a family and having a life and taking care of themselves and being a powerful leader in Silicon Valley. Up until her leadership moment, there weren't a lot of women talking about that trade-off. And she came and brought it to the forefront. She sold a New York Times bestselling book on it and Lean In. And then a few years later, she sold another book about resilience and how not just women, but people should be, taking care of themselves in the wake of really, bleak tragedies. And her voice has moved the conversation. She's put a lot of money into philanthropy around these types of issues. And I think she's inspired other women to speak out, women in leadership on these types of issues. So think about, say what you will about Sheryl Sandberg as a business leader. I think she was a very shrewd business leader, but, and her Facebook legacy, but the legacy that she's made on women in Silicon Valley and in the corporate world has been pretty significant.
Sarah, then there's the question of what's next. There are whispers about politics. She mentioned philanthropy in her statement, but some say she's eyeing Dianne Feinstein's Senate seat. Can't help but ask you, the president's 82 when he would run again, and there is no bench for the Democrats. Could she throw her name in the hat for president?
I mean, I hear the same type of rumors that you're hearing. If I had to give you my honest gut, I think Sheryl Sandberg needs a little bit of a reputation cleanse right now. She just went through being demonized at Facebook for the past 5 years. And if she wants to run for higher office, I think she needs to take some time to really figure out what are her priorities. How is she going to rebrand herself as a person who is civic minded and really focused on what's better for society? When she was managing Facebook throughout a lot of drama, one of the challenges was that her reputation became marred as somebody who put sort of profit over people. And she's not going to be able to pivot away from that reputation in time for a 2024 run. I think she'll take some time, focus on philanthropy, focus on the causes she cares about. And if one day she does want to get into government or civics, that could be a good fit, but it's not going to be in the next, I don't think in the next few years.
Well, Sarah, you mentioned reputation, so it's a perfect segue because we also want to talk to you about the Axios and Harris poll that was recently put out. You were gauging the reputation of the most valuable brands in America. And since we're talking about Facebook, about Meta, they actually were at the 97th spot. Some other big tech names like Twitter, TikTok were also towards the end of that list. When you talk about a reputation problem, I guess, what is it with Facebook, with TikTok, with Twitter? What's that common denominator, and what do they need to do to turn that around?
Yeah, it's a great question. I mean, if you look at all of tech, companies that make stuff like hardware, they're doing fine reputationally. It's the companies that are focused on software, but particularly social media and information technology that are struggling. I think there's a few reasons. One, there's a huge data privacy issue. In the past few years, with things like the Experian data breach, things like the Cambridge Analytica scandal, people are much more wary of the way that their personal data is used for advertising. And that's Facebook's business model, that's TikTok's business model, that's Twitter's. Secondly, there's been a huge sort of upheaval in the US around free speech and what that means for the future of democracy and our elections. Conservatives have particularly made this a platform heading into the midterms, and they used it as a platform in 2020 as well. And so tech companies that focus on sharing information, like a social media platform, they're really caught up in the middle of this debate in America right now because people see them as the ones making big decisions over our conversation. I think that's definitely negatively impacted their reputation because you can't please everyone, of course. And then finally, I think one of the big issues is there's this really weird reckoning right now around capitalism. For the first time, you have fringe right platforms and hosts and media figures saying that capitalism maybe needs to be revisited. And Facebook is a company that really represents the best of capitalism in some ways. They grew massive over many years. And then on the other side of the political aisle, hyper progressive lawmakers and advocates say companies like this shouldn't have so much power. They need to redistribute the wealth. Yeah. And so for those three reasons, I think massive big tech platforms like TikTok, like Facebook, they are just reputationally in a very tough spot right now.
Sarah, speaking of reputation, I'm a former CNN anchor here, so very interested about your reporting under their new leader, Chris Licht, and they have a reputation of watering down the term breaking news. What is their new leader going to do in that regard?
It's a great question. So their new leader, Chris Licht, sent out a memo to staff that Axios obtained this morning that essentially said they're going to be adding breaking news to their sort of standards guide to figure out when's the most appropriate time that you're going to use the breaking news banner on TV. And to your point, the reason they're doing that, Licht says, is because you're losing the impact of real breaking news and you're losing trust with your audience if you're not delivering news that's actually breaking when you put up that banner. And so I think you're just going to start to see them be a little bit more selective about it. And broadly speaking, I think you're going to start to see some shifts at CNN to make the network really hyper-focused on quality, center, middle-of-the-road journalism, as opposed to, any sort of perspective programming or hyperbolic and alarmist content.
We got to dive back into the May jobs report. Came in better than expected, despite economic concerns amid high inflation. Joining us now for more on the state of the labor market, we've got U.S. Labor Secretary Marty Walsh and Yahoo Finance's Rick Newman joining for the conversation as well. Labor Secretary, thanks for taking the time here this morning. The reading, better than expected, and unemployment sitting at about 3.6%. Where are you going to look for sequential improvements to continue to be made in the employment situation?
Well, I certainly think that, when you look at this jobs report, it's a good report. We have to look at areas like leisure hospitality that still has room to grow. We saw a little bit of a decline in retail this last month. So obviously we're going to watch that. We see areas like in medical and education that there's an ability for room to grow as well. So we do have places to grow in this report in the job market. But overall, it's a very steady and stable and strong growth that we're seeing right now.
You're right, Mr. Secretary. It's steady growth, and you did see it come in better than Wall Street economists' estimates. So my question to you is, do you think we are running the risk, not just here in media land, in corporate America, of talking the economy into a recession?
Well, I mean, I don't want to create any news, but I hope we don't talk into a recession. I feel like when I go around the country, I talk to businesses, and I still hear some of the challenges from businesses. They're looking to hire people, and they can't find people out there. But their businesses are still continue to move forward. I just think we have to take this thing a step at a time here. I don't think we shouldn't be hoping or predicting we're going to have a recession moving forward. I think that we're going through very uncertain economic times right now in our country. I think that, due to the pandemic, due to the war in Ukraine, due to a lot of other circumstances that are not within our control in some cases. And I think the president's put out a forward plan to really deal with the inflation issues and made a very big statement the other day when he said the Federal Reserve's independent body to do their own thing. So I think that says a lot right there.
Secretary Walsh, Rick Newman here. Job market definitely solid, but consumer confidence is lousy by some metrics, even at recessionary levels. Should the Biden administration do something about that? Can you do something about that? Or should you just let consumers feel the way they want to feel?
No, I think the president, did some pieces in the paper last week, and he'll be talking about the economy later today. I think we just need to continue to do our job here. I think people are concerned about the gas prices. People are concerned about food prices. I think that people are concerned about what they're paying. I mean, I think that even though somebody might be making more money than they did this time 3 years ago or 2 years ago, and they might be in a better job than they were, they still feel the pressures of the inflation. And I think that's something we shouldn't run away from. We should embrace it and do everything we can to continue to fight through that. And when you think of the American economy, we're coming back stronger than most economies in the world, but we still have these challenges. And again, it's not unique to the United States. It's happening globally.
Secretary Walsh, we're increasingly hearing about hiring freezes and even cuts in some instances in some of the strongest areas, or at least most competitive areas of the employment market and technology in that sector during the month of April as well. Looking back at some other backward-looking data, there was almost 2 jobs open for every unemployed person. If hiring freezes persist, creating kind of this vacuum effect of those open positions, what economic impact would you be anticipating?
Well, I don't know how long the hiring freezes are going to be and if they're going to be across every industry. I think that it also goes back to us, the Department of Labor and with states and cities around the country, workforce development, job training, and apprenticeships. I think that we really have to start thinking about the economy when it comes to workers in a different way. I think we have to be really focused and intentional on making investments in workforce development programs and apprenticeship programs. I was in Germany 2 weeks ago, and I had a chance to go to Volkswagen, and I did a tour of the facility, and I saw young people there doing an apprenticeship program where they weren't going to going to college, they were going to go into a career. And we really have to start thinking as an American economy about how do we continue to prepare people for the future. I know this isn't answering the question you just asked me, but it's about getting the next level of workers in America skilled up to do other jobs.
Inflation right now, you mentioned it, it's bumming out consumers. It's 8.3%. Are you seeing any signs that inflation might be coming down? Can we get that below 8%, maybe below 7% by the end of the summer?
Well, I think we saw 1/10 of a drop last week, I think it was, and hopefully we can see those numbers coming down. The president released some oil reserves. Hopefully we'll see some gas prices coming down. Again, this is a very challenging time right now with inflation. We did have issues on supply chain and getting goods into the country. We're seeing those alleviated a bit, but with more goods coming into the country. The one thing we did see though this month is about a 61,000 job drop in retail. So I don't know if that's cooling down a bit in the retail sales, but we're going to be watching all these different signs as we move forward in the next month.
Mr. Secretary, you mentioned that you visited Volkswagen. You saw workers being trained. And they are a company that continues to hire. But here in the U.S., we're getting word now that Tesla company, if you've gotten to know a little bit, and Elon Musk potentially looking to lay off 10% of its workforce. Are you surprised by an announcement like that?
Certainly Elon Musk is a very smart person, and he's looking at where he is in the economy, where his company is. I'm hopeful that won't have to happen. I'm hopeful that as we continue to move forward here, we'll continue to see our economy get stronger. I have not spoken to. I haven't had a conversation with Mr. Musk since I met with him about 2 months ago. But would love to at some point follow back up with him and think about what more we can do as a government. Quite honestly, this is not just a government response. This is a business response as well in where we're headed with the economy.
Secretary Walsh, as you look across some of the investments that businesses are making, even in automating certain kind of monotonous jobs within their workforce and within their operations, how do you engage with those businesses? What conversations are you having with them to also make sure that they are still prioritizing that human headcount at the end of the day too, so that we are seeing more jobs open up, not just for the robots and the robot beat coverers like us here on Yahoo Finance, but also some of the workforce that is looking to revitalize and reskill in order to still have those positions available to them?
Yeah, we're certainly very open to having conversations with any companies that's looking to do more technology. As I mentioned, when I was in Germany, I saw tons of computerized manufacturing going on in the Volkswagen facility, and they still employed 60,000 people in the town of Wolfsburg, where Volkswagen is headquartered. So even when automation comes, we still need people, and it's about how do we train these people up. I was with the GM facility with the president about 6 months ago. We saw automation there, but we also saw lots of folks working there as well. So there's a balance, and you know, as the department, as the Secretary of Labor, you know, certainly we're going to work with companies as we move forward here. You know, I'm not worried about the technology today with getting rid of people, but certainly it's something that we have to be cognizant of and making sure that we're skilling people up to do the jobs in these factories that is still going to be needed.
Secretary Walsh, are you rooting for any particular team in the NBA Finals?
Oh yeah, they won last night, man. Baby, they look good. My you know, Jason Tatum, Brown, Smart, Williams, Horford. Oh my God, what a great win. That was a you know, that was a good win last night. That was an important win last night for us. Golden State, I believe, they were undefeated at home in the playoffs so far. So we'll see what happens in Game 2.